So as a creator, you're likely going to owe a lot more in taxes than you actually expect. However, there are a number of ways to reduce the amount of taxes you're actually going to owe, from taking advantage of more tax deductions, moving to a 0% tax state, or just finding creative ways to lower your taxable income, all of which are things we have videos on this YouTube channel right here. But before you even start exploring all of those different avenues, it's really important to figure out if your business is actually structured in the most tax efficient way possible, because all of those things are kind of after the fact of the money actually flowing through your business. So if your business is not set up correctly, then that's just going to cause a ton of inefficiencies. And even if you optimize the stuff over here, it's going through this filter of your business that's going to make things less tax efficient. Now, most creators will generally start off with either a sole proprietorship, which is what you have by default if you don't actually set up a legal structure for your business, or an LLC, and kind of just leave it at that. The problem is neither of these avenues actually provide you with any significant tax benefits. An S Corp, on the other hand, has the potential to significantly reduce your tax burden depending on your particular situation. We're going to dive into exactly who it's best for right now. So starting off, what actually is an S corporation? Well, a lot of people have this misconception that it is a business structure, and that's not actually the case, okay? It's not like an LLC or a sole proprietorship where it's an actual business structure. What it actually is it's a tax election that you file with the IRS. And what that means in plain English is that it's just a form that you're submitting to the IRS telling them, hey, I want to be taxed in this way, not in that way. Because if you just establish an LLC or a sole proprietorship, there are tax consequences of that, which we'll dive into, that you just kind of get by default. But the S Corp is like, hey, I'm normally taxed like this. I actually want to be taxed like that. It's not a different business structure. You still have that underlying LLC, but you're taxed as an S corporation. Hopefully that makes sense so far. So it only changes the way that you're taxed, and you still need some kind of underlying business structure, the most common of which is an LLC, in order to set up this S corporation. Now, there are a few rules that you actually have to follow if you want to set an S corporation up. The three main rules that might apply to you as a content creator or self-employed person are going to be: first of which, you're not allowed to have over 100 shareholders in your company. If you're a YouTube channel, you probably don't have over 100 owners of your channel, so that shouldn't be a huge issue for you. Second rule is that your business must be located in the United States. And the third rule is that your business cannot be owned by any non-residents of the United States. So all of the owners in your business must be United States citizens. So those are the three main rules. There are a couple other rules that apply much less frequently and kind of depend on like what type of business you actually have, like what you're in the business of doing. But if you're an online creator, they're most likely not going to apply to you. So now that you actually understand what an S corporation actually is, you know that you can probably set one up. How do they actually work? Okay, how does this tax election end up saving you money? Well, the main benefit is that it can potentially lower the total amount of taxes that you are going to owe on your business income. Now, how does that actually happen? Now, this is because of how you're actually allowed to pay yourself once you have an S corporation set up. So the IRS is going to classify you as an owner-operator of your business. Essentially what that means is you're going to be allowed to pay yourself as an operator, so as somebody who actually works in the business, and the owner, or somebody who actually owns the business. And so the worker in the business gets to get paid a salary. The owner of the business gets to get paid distributions or dividends. And these are going to be taxed very differently, okay? Your salary, or what you're paid as the employee of your business, that will be taxed with income taxes and self-employment taxes. Now, the distributions or dividends that you're paid to yourself as the owner, those are only going to be taxed with income taxes. There's no self-employment taxes on those distributions or dividends. This is the key, okay? This is where the tax savings is. You're saving on self-employment taxes on those dividends or distributions that you are paid. Now, without an S Corp, so if you just have like an LLC or a sole proprietorship, all of your income is going to be subject to income taxes and self-employment taxes. There is no salary and then distributions. It's all one thing, and that one thing is taxed with both income taxes and self-employment taxes. No ways around that. No ifs, ands, or buts. If you are a LLC or sole proprietorship, you're subject to both of those on all of your income. So the main benefit here is on the S corporation side, your dividends or distributions are not taxed with self-employment tax. These are a flat 15.3% up to a certain threshold. So this could potentially be a significant tax savings for you. We're talking potentially tens of thousands of dollars, depending on how much money you actually make from your business, can be saved through this avenue. Now, you might be wondering, okay, if I've got an S corporation, why would I pay myself any salary at all? Okay, because remember, the salary gets your income taxes and your self-employment taxes. The distribution, only income taxes, no self-employment taxes. So you might be wondering, why don't I just do all distributions, no salary, pay no self-employment taxes, just skip that whole thing? We don't need to pay any of those. Well, the IRS thought of that and they weren't a big fan, okay? And so what they basically said is that you need to pay yourself a reasonable salary, okay? The salary has to be at least reasonable, and super broad, okay? Super broad. The word reasonable, who knows what that means? But essentially what this means is that the IRS is going to get some self-employment taxes, but you are potentially able to save a significant amount. Anything beyond that reasonable salary is is not going to be subject to those self-employment taxes. And now what is actually considered reasonable here is going to vary based on your individual circumstances, the responsibilities that you have within your actual business, and a whole bunch of other stuff. So because of that, it's super key to talk to someone who has experience working with other people in your field. So if you are a content creator, it's going to be important to talk to someone who knows about taxes and who knows about taxes specifically for other content creators. They're going to be able to give you the best estimate for what a reasonable salary would be considered in your particular niche, because it's going to vary a ton. I mean, if you're a doctor, obviously a reasonable salary going to be a lot different from a content creator, a videographer, whatever you want to call yourself. Okay, so in the grand scheme of things, definitely important to talk to a pro here, because the difference between setting a reasonable salary too low and too high, if you're setting it too low, you're subject to significant audit risk. Okay, because the IRS wants to make sure that if they're giving you this S Corp election, they want to make sure that you're not abusing it. Okay, and so what they want to make sure of is that your salary is actually reasonable. So you're subjecting yourself to a bit of a higher audit risk here in this case, because they want to make sure that you're not just trying to skirt around the rules here, pay yourself like $2 a year in salary and then take the rest in distributions. Okay, because that's not a reasonable salary most likely for whatever you're doing in your business. Now, on the other hand, if you set your salary too high, then you're paying self-employment taxes on more income than you need to. So you really want to find that sweet spot in the middle where it's not too low that you're going to get audited, not too high that you're paying too much in taxes, and just find that happy medium all around. Now, bouncing off of that real quick, I want to dive back into the difference between an LLC and an S corporation. Okay, so the question I get a lot of times from creators is like, should I be an LLC or should I be an S Corp? And if you've been paying attention so far, you know that's not the right question to ask, okay? Because an LLC is a legal structure for your business. An S Corp is a tax election. These are different things, okay? If you have an S corporation tax status, you are an LLC, so you're both of them, okay? So it's not an either or question. It's should I have an LLC that's taxed as LLCs are taxed, or should I have an LLC and have that S Corp election so it's taxed as an S Corp? Okay, that is the question that you should be asking. Now, I want to briefly cover how LLCs are actually taxed as well, because this is important to know if you are an LLC. And a lot of people actually don't understand this, okay? So I want to keep this pretty simple. So if you're a single member LLC, so if you own 100% of your LLC, how this is going to be taxed is basically as a disregarded entity. And what this means is that you're not getting any special tax treatment for your LLC. So a lot of people think that if I set up an LLC, I'm getting special tax treatment. It's not the case, okay? A single member LLC is a disregarded tax entity. It's basically treated the exact same as if you had a sole proprietorship. The advantage comes in the form of separating your liability, okay? So getting your personal assets and your business assets separated. That's one of the main benefits to an LLC. It has nothing to do with taxes, and it's everything to do with protecting your personal assets. So know that single member LLC, it is a disregarded entity for tax purposes. You're not getting any tax benefits there. All of the income, all the expenses are passed through to your personal tax return. You're paying income taxes and self-employment taxes on all of those profits that are passed through to you. Now, with a multiple member LLC, on the other hand, say you own 50%, your buddy owns 50% of this LLC that is your YouTube channel, whatever your business is, okay? In that case, your LLC is taxed as a partnership, okay? And in that case, what's happening is basically a proportionate share of your income and expenses are passed through to both people. So again, it's total pass through. There is no separate taxation here. It's all going to be taxed with income taxes and self-employment taxes. Regardless of single member or multiple member, you're paying self-employment taxes and income taxes on 100% of the income that your LLC does generate. So now that you understand that, let's dive into who actually benefits from an S corporation. Well, you need to be making a significant amount of money online, and that is for two main reasons. The first of which is that your tax savings aren't going to be that significant if you don't have a significant amount of income. This is because you need to be making above and beyond what is considered a reasonable salary for your particular business. So say in your business, totally hypothetical, what was considered a reasonable salary for you was $40,000 per year. If you're only making 40 grand a year from your business, and 40 grand is a reasonable salary, you're not getting any benefit whatsoever from an S corporation, okay? In fact, you're paying even more to set this thing up, and it's a little bit more of a hassle to maintain this thing. So this S corporation is a net negative thing for you. Whereas on the other hand, if say you were making $540,000, okay, then you've got that whole 500 grand up top that's not going to be taxed with any self-employment taxes. That is a huge, huge tax savings for you. So as you can see, that the higher amount of income you're making above and beyond what is considered a reasonable salary for your particular situation, that's where the real benefit starts to come in. And you don't have to be making crazy beyond where that reasonable salary point is, but you have to make it a little bit more than that for it to be a positive expected value for you to actually do this. Additionally, you want it to be high enough to make up for the extra time and money required to set this thing up, because an S corporation is not free to set up. We're going to talk about in just a little bit how to actually set this thing up, but it's not free to do. So you have to make sure that the benefits outweigh the costs, okay? Because if it costs, say, a couple $1,000s to set one of these things up, you're only saving a couple $100, doesn't make sense, okay? But if you're saving tens of thousands of dollars, costs you a couple $1,000s, not a big deal. Now, a quick rule of thumb here, I mean, this is a very, very broad rule of thumb, but for creators in general, okay, not specific tax advice, but for creators in general, if you're making above $50,000 of profit, that is where you could start considering setting up an S Corp election. If you're making less than 50 grand in profits, it's not going to be worth your time to set one of these things up, because once you get to your reasonable salary and the extra costs associated, there's no value there. Okay, but if you're making over 50 grand in profit per year, then this could be potentially a route for you to consider. Now, if that's the case, let's talk about how to actually set up your S corporation. Well, the main thing you have to do is you have to file Form 2553 with the IRS. This is also called the election by a small business corporation, and basically tells the IRS, hey, I want to be taxed as an S corporation, not as either a disregarded entity or as a partnership. Now, you've got until March 15th of the current year to file this form with the IRS. So for 2021, for example, that deadline is coming up fairly soon, which is why I wanted to get this video out. You've got until March 15th to put this election in with the IRS. If you do it after that date, then it's not going to apply for the current year. You're gonna have to wait till the next year to actually put this election in. Now, in addition to that, you're also going to need, like we said before, a registered business entity. So for most creators, this is an LLC that they've already got set up. If you do not have an LLC, it's going to cost you between $100 and about $500, depending on what state you live in order to get your articles of incorporation filed with your particular state and get that all legally set up. I've got a couple videos about LLCs as well if you want to check those out. They'll give you some more info on how that process actually works. Now, when it comes to actually setting up the LLC, for a single member LLC, the documentation is pretty minimal. Okay, you don't need to do a whole lot in order to set up a single member LLC. Typically, you can do that on your own without too much trouble. If you've got a multiple member LLC, in that situation, you're definitely going to want to talk to some kind of legal professional, a lawyer, etc., who can help you draft your documents, because it's really important that when you're going to business partnerships with someone, you really have everything kind of flushed out. You got your T's crossed, your I's dotted, all that stuff where it needs to be. So shelling out a couple $100 for a couple hours of a lawyer's time is going to be well worth your while. I can tell you from personal experience, that is definitely the move. So once you've got your legal structure set up, then you can move on to actually setting up your S Corp. In that situation, I would also suggest you work with a professional, okay, a tax professional in this case, who can help you get that set up. Again, establish your reasonable salary and really just get all your T's crossed, your I's dotted, and make sure you don't have any mistakes here. And again, shelling out a couple $100 to work with a professional here, it's going to be worth your while, because like a mistake on your S Corp documentation could end up costing you a significant amount of money. Okay, if you think that you're going to be able to save tens of thousands of dollars in taxes, turns out you didn't cross a T, you didn't dot an I, and now you can't save that money. You're going to wish you would have paid $500 to get this stuff done right, instead of showing up at the end of the year and being like, oh shoot, I actually owe tens of thousands of dollars more in taxes than I thought I did. This is a thumbs down. So in essence, to put a bow on all of this, okay, an S corporation, all it is a tax election that allows you to distinguish between your salary and your distributions, because your distributions are going to be taxed not with self-employment taxes, only with income taxes, while your salary is going to be hit with self-employment and income taxes. You got to make sure your salary is reasonable. You follow the rules there, because if your salary is not reasonable, then you subject yourself to increased risk of an IRS audit. They might disallow your business entity. They might disallow your S Corp. So you want to make sure that doesn't happen. It's going to be likely worth your while to talk to a pro here who works specifically with people in your niche. If you are a content creator, talk to someone who works with content creators and get that flushed out so you know exactly what your reasonable salary should be. So you're not paying too much, but at the same time, you're not getting audited and getting in some trouble with the IRS. Now, the next thing you should do is click that subscribe button down below and check out this video over here, where I dive deep into all things self-employment taxes. These tend to sneak up on newer content creators, online entrepreneurs, what have you. And so that video is really going to break down everything you need to know about self-employment taxes, how they work, how much they are, and how to actually pay them. So check out that video, and I'll see you over there.